Let's discuss some of the movers this morning. For that, I'm going to bring in Nicole Petallides. She joins me here at the desk. Nicole, you have your eye on a few names here, not necessarily earnings winners, but big winners this year, and that's Crowdstrike to kick things off, down to 3% right now, despite the fact that this has been a huge favorite, has seen this huge bounce off the lows earlier this summer, up to about 20% still this month. But Wall Street not impressed with these numbers?
You know, here's the thing about CrowdStrike. I mean, I think you made a great point of it coming up off the lows. When CrowdStrike had its global IT outage, it was monumental. Then they started to talk about all the competition and how they could be the beneficiaries. And now people are back on board. And so when you look at what's going on with CrowdStrike today, where I have a lot of price target calls for you, but certainly has run up from that $200. We're seeing it down about 3% today. It did have earnings here. It did have a double beat here, adjusted 93 cents versus 81 cents. Revenue 1.01 billion versus 982.26 million. So a double beat there. That was good news overall. HSBC came to a hold from a buy with a 347 target. Right now it's at 352, so that's a stinker. I wouldn't look at that one if this is your favorite stock. But for the rest of them, I mean, you have Susquehanna at 400, you have UBS at 396, Canaccord higher as well, and others. So many others that are on the upper end of the range, and that overall there is obviously some optimism surrounding these names.
Yeah, I was taking a look. I did see Dan Ives' note. He was already a bull on CrowdStrike and turning more bullish following this report, boosting the price target to 390, saying while the company will face some lingering headwinds over the next 12 months as a consequence of the IT outage, it does not change our positive long-term view as it remains the gold standard for cybersecurity. The one thing I did want to take a look at, and I was just going to look here, the median price target was actually below where CrowdStrike was actually where it closed yesterday, despite the fact that there was so much bullishness on the street. Now it's above the median price target, officially at 372, following all those price target hikes. So we knew that there was a disconnect there, and we're seeing that kind of get sorted out. But despite this beat and raise quarter, CrowdStrike shares down about 3.5% right now, but still 75% off the earlier lows. All right, you're also taking a look at Dell and HPQ. Both are lower after earnings. Obviously, different performances for those names. But Dell down 12.5%, HPQ down about 8%. Fill us in on why.
Listen, I mean, the big picture is people are not buying new PCs. They're not upgrading. And there is some hope within some of the reports, and I'll get to that. But both of these names are trading to the downside. We've had Dell down about 12%. HPQ is down about 8%. With some downbeat outlooks because there's just no rush for folks to upgrade. The question is when people will upgrade. I will go through the numbers first, and I'll give you some of the reasons why people may upgrade. You had a beat and a miss for Dell. You had earnings per share of 215, beat the 206, revenue 24.37 billion. That was the miss, 24.56 billion. So a slight miss there for Dell. And then for HPQ, this was fourth quarter numbers, a double miss, 93 cents versus 94 cents, 14.05 billion versus 14.11 billion. So a miss there. The period of hope comes from, and one of the executives noting this, is that there are a couple of reasons that could, CFO over at HPQ, giving a couple of reasons that you could actually see PC demand and a refresh. And that was the Windows 11 refresh. This is the Microsoft Windows October 2025. That's the Microsoft 10, Windows 10. So that could help things, that and support increase of AI adoption. Another reason that could give a little support. But overall, these two names are running side by side. Sometimes you'll see a disparity of one company in the same group doing so much better than the other, but it seems like the message is similar from both of them. Maybe a little more optimistic from HPQ because CFO Karen Parkhill is talking about how and when it'll get stronger in 2025, maybe in the back half. But overall the downbeat outlook, at least in the near term, for PCs.
Yeah, and I think that Dell, it's important to note, the AI optimized server demand was still pretty impressive. I think it was up something like 34% year over year in terms of revenue there, but that still wasn't enough to really top expectations. If you take a look at the analyst community, still very cautious on HPQ. They were already heading into this report with more than 60% in the hold camp. Different story for Dell. Basically 88% of analysts rate Dell as a buy, despite the fact that, it has seen 60% year-to-date gains despite some of these losses that we're seeing today, down more than 13%.
Yeah.
Any analysts chime in about either name just following these reports?
Yeah, I mean, I saw Goldman Sachs has a 165 and a buy on Dell. That's good news considering it's at 141 or so, my last take. So that was some positive. And then on HPQ, as you noted, some of them were closer to the current price targets. I saw 35 from Barclays, Goldman Sachs with a 38, 40 from JP Morgan. Better but not great, right? Mm-hmm. We're not seeing some great numbers coming out of this, but some upside potential. I thought the Goldman report on Dell looked pretty good. I mean, that was at least one bright spot for that group.
Yeah, the median price target on Dell now 150. It's currently trading just below 142, so about $8 upside. Yeah. The median for HPQ at 37, which is actually below where it's currently trading. We talked about those traders being on the sidelines, but it's down about, call it 9% right now, trading just below $36 a share. So Wall Street not as optimistic there. All right, we're also taking a look at Urban Outfitters. This is a name that was higher year to date, but really adding to those gains today, up 13% after earnings. Fill us in on this report.
I think the key phrase is holiday season optimism. What? I mean, I thought everything was so doom and gloom and people had credit card debt, right? We are hearing from, at least some of the retail federation and some of those with their projections. Didn't seem like it was going to be a terrible holiday season, but that people were searching for value. And I thought it was interesting within this report that they said that they would not have to do aggressive price discounting. They have the very popular Anthropologie, that's doing very well for them, Free People, and of course Urban Outfitters. The earnings per share and revenue, you saw a double beat there on the top and bottom line. Earnings per share $1.10, 85 cents was the estimate. Revenue $1.36 billion, the estimate was $1.33 billion. So you did have a double beat there, but you saw Citigroup, this is the buy rating, up from neutral, with just talking about that they have been executing in a strong way. That the recovery that they've seen, the margin recovery has been good news, and that is likely to continue into the new year, into 2025. So they do have a price target now of $59, up from $42. So that was good news overall. I mean, it seemed that they also noted that the risk reward was very favorable on this name. And it's so funny as we watch these retailers coming in, you'll have one doing well and one missing. I mean, look at what happened with Walmart and Target. I mean, that's the perfect example of similar types of stores, but Walmart's had a lot of more innovation and getting folks in there, and Target was suffering. So in this case, this is a goodie.
Mm-hmm. Yeah, no, for sure. There's definitely been winners and losers. Urban Outfitters definitely a winner, but you mentioned the kind of the breakdown of the stores. Anthropologie same-store sales up almost 6%, 5.8%. Yep. But Urban Outfitters, the namesake, down almost 9% in the quarter. So that's still seemingly very weak.
Reminds me of the Gap. Remember when Old Navy was the jewel of the Gap, and then Gap, the namesake store, was suffering? I saw that Anthropologie was the star here, and so they need to work on the Urban Outfitters brand without that particular store.
The younger demographic there. Free People comp sales were up about 5.3%. I do think it's important to note, you mentioned that City upgrade. They're turning bullish, but if you take a look at the breakdown on Urban Outfitters, almost 80% of analysts are sitting on the sidelines for this name, and the median price target's $41.50. Well, guess what? The fact that it's today
it's
trading at 45 above that, we'll see if there are any other price target adjustments, or potentially these results turning people bullish, but doesn't seem to be the case.
I see 53 from Bank of America. They just came in with that with a buy, but I was really impressed by the holiday season optimism. That gives us, and you have 5 fewer shopping days. I know everybody's been talking about that, the way Thursday, Thanksgiving falls to Christmas. So get shopping.
We'll see. Jan Kniffen was pretty bullish on the holiday shopping season.
So great.
Nicole Petallides, thank you so much for breaking it all down for us.